So we've had the dot-com bubble. We had the housing bubble. Some people call this the everything bubble. There is lots to talk about this week. We got China. We got the Fed. Where's the consumer? Stay tuned. Sit back. Let's get started. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links. And if you're looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing. Also, again, thank you so much. By the time this video hits, we will have hit 3,000 subscribers, 700 new subs just in the last month. This week's agenda, we're going to go to the big charts, a little bit shorter this week. We're going to talk about bonds, what's on my radar, and what keeps me up at night. So let's go to the big charts. First up, showed this last time, had some good comments. Secular bear markets, bull markets. Clearly, we are still within a secular bull market. Now, within that, you can have bumps, right? Last year, you go back to 14, 16, things were fairly flat. But where are we today as far as the markets and our signals? So, obviously, we have broken out, okay? How far have we come? You know, not that much. I went back to last year to yesterday. We're up 4% year over year. So, it's not this huge run up. Yes, this year has been big, but people have, of course, forgotten about that ugliness right there. So what do we see right now? First off, signals, they're all positive, right? Short-term, mid-term, long-term for obvious reasons. Now, that being said, I think that we're starting to see overbought conditions. Why? What has driven this market? So I'm going to talk about that in what keeps me up at night. But first and foremost, FOMO, the fear of missing out. That's what's driven this market. Earnings have not been good. We know that. I'll talk about that, right? China deal isn't happening. What's driving it? FOMO. That's it. But at this point, you go down here. Relative strength over a 10-day, clearly overbought, starting to get a little bit exhausted, starting to see getting close to a negative turnover on momentum. That's going to push things down. So at this point, yeah, we broke out again today. Have no idea why. Nothing's going on. But here we are, right? The market gives us what it gives us. So right now we continue to be positive. But again, Mr. Michael, why are you always so negative? Why are you a bear? I'm not. We are fully invested right now. I'm just in other sectors, okay? And we'll talk about that in a second. But what lies below, right? Here's your new highs minus new lows on the New York Stock Exchange. Obviously a much broader view. And you can see the numbers today, 150. Yesterday, we only had 68 new companies. And again, the histogram, that's what I'm looking at, okay, that represents highs minus lows. Look at last year when we were hitting all-time highs. You just had so much strength beneath the market, and that is just not existing right now. Next up, okay, a lot going on here, okay? What we're showing here is advanced decline percentage. These are breadth thrusts. We're looking for positive or negative to determine where the market's going. Pretty easy to look at this and say, wow, look at these. Blah, right? Here we are hitting all-time highs, and we're not getting any thrust in the S&P, mid cap or small cap. That's why it's very difficult for me to believe in what's happening right now. So we are positive with a negative bias going forward, and we'll follow that as we go forward. So next up, how about bonds? Have we seen any change here? Well, yeah, okay, so bonds have been going back and forth. Last week, oh, the bond thrust, it's over, it's done, right? The number one sector right now being shorted are bonds. Well, we like bonds. We like bond proxies, okay? We hit the high end of our range, opportunity to go back in, okay? And now you see we're going down again and you'll see the impact of that. Now, we've talked about yield spreads, 10-year minus 2-year. Well, that's down here, okay, 0.24. So this idea that a recession is coming when it inverts, okay, not on the table right now. We don't see a recession. We see a slowdown, but as of today, we are not seeing a recession. Next up, what's on my radar? Okay, so we talked about bonds going down. We've been really big with bonds, bond proxies, and we'll discuss that. So bond proxies, here's one of them. Utilities, right? Clearly you have a bullish trend line. You can see it, and you had a little bit of a pullback within that bullish trend line. So here was an opportunity. So when we have new clients coming in, maybe we don't have a full position yet, this is where we add. So this week, it was a good opportunity, and we're seeing a lot of our bond proxies moving forward this week, okay? Now, same thing with gold. When rates go down, take a look. Gold goes up. That's exactly what happened. So over the last month, when treasuries went up, gold went down, right? So we're starting to see a little bit of shift on that. We have a nice little bump back up. This is one of our bigger holdings. I like gold right now. So again, gold has been a nice place to be. Not a bond proxy, but we've talked about this and having patience. Healthcare, look at it, right? Kind of went nowhere for quite some time. We waited, and there's your breakout. Boom, a little bit of a pullback. Pullbacks become opportunities if you're not in it. I think we're getting a little bit, well, we're not quite overbought yet, but right now probably anticipate a pause at these levels and to see if we can grind out to the next level. So what else are we seeing? Inflation, okay? Forget about what the Fed's saying. We saw it this week. I'll talk about it in a second and what keeps me up at night. So when you look at inflation, here's your CRB index, a leading indicator, right? So we've seen this go up. So how do you look at that as an opportunity as it pertains to investing? So one of our areas that we like is oil. Talked about this last time. You kind of see a reverse head and shoulders, but more importantly, it's starting to come out, consolidating, not uncommon, okay? I like where it's sitting. Volatility's pretty low, and we're waiting for that next surge up. So oil's a nice place to be. Natural gas, okay? Ugly, found a bottom, came back, up today, like natural gas. So we'll get into a position, couple percentage points, and add as we see pullbacks. So again, you can look at lumber. Yes, that's an inflationary product. We're seeing that go up. Cocoa. There's a lot of other sectors that we look at as it pertains to inflation where you can take advantage of this move. Next up, what keeps me up at night? All right, before I start, what keeps me up at night? Want to let you know, compliance, I had to turn off comments. So join me, bring the conversation to Facebook and Twitter. I'm very active on there. We'll have links below, constantly putting out new articles and other things that are very beneficial to folks. Also, about Michael, services we offer, you name it, we're here to help you out. Let's get into it. All right, first up, what keeps me up at night? I'm going to break this into 3 sections, like I said in the opening here. The Fed, GDP, growth, okay? We're going to talk about China, and then we're going to get into the consumer. So we've been talking about this. You're not seeing a lot on CNBC. It's crazy to me, right? So what has happened is when we stopped quantitative easing, they're letting things go down. Looks nice, right? We're getting this off the balance sheet. That represents $700 billion, and that's a good thing. Well, since September 26, they have put back in $290 billion. Folks, what's driving the markets? Right here. The Fed's been pumping liquidity since September. Money, it's out there. Liquidity, the market craves liquidity, right? And that's what's happening behind the scenes. You watched the Fed the other day, oh, we just need more growth. You're pumping all this money in the system. It's a farce, okay? And it really concerns me This is quantitative easing. They're not calling it that, but that's what it is. So let's look at the impact. Latest GDP rate now. Look at that. So they've pumped $290 billion into the market, and this is all we're getting out of that. So let's look at this. What I did was I took GDP and the Fed balance sheet. GDP is in blue, Fed balance sheet, okay? What has been the impact of this, right? This is where we started after the crisis. Drove up, sideways, then down, all right? Pumped a ton of money, right? Where are we? Right? $4 trillion. It's ridiculous how much money's been put in. How about GDP? Nowhere. No impact. If the Fed wasn't doing this, imagine where the market would be. So yeah, this does keep me up at night because at some point the Fed's going to say, well, we're going to continue to put money out there, which is not a good thing, or they're going to stop, and then we know what could happen. Okay? So the next thing is Fed surplus as a percent of GDP. We're at the highest number, negative 4.61% in non-wartime. That's a big thing, okay? The Fed is just screwing up. So China, right? It's all about China, right? Every time we're going to get a deal, there's no deal, okay? Look at this. Here's China. If there's a deal in China, how come their market stinks? All right? And you look at the facts, because that's what I live on, facts. This was yesterday's data that came on. Let me see. We got 1, 2 greens. They're actually Japan. Look at China. I mean, minus 10%, 7%. All the retail, survey jobless rate. It is ugly right now in China. There is not going to be a deal. And you look around that area, you look at Shanghai. Well, how's Shanghai? Well, I'll tell you this. Shanghai, let's go back again. Sorry, got a little quick there. Shanghai is down, right? Pretty ugly, lower high, lower high. Well, if China's doing well, you think Shanghai would be doing well? How about copper? Copper's big. That shows growth because you need copper for growth, right? Peaked last year, lower, lower, lower. If copper isn't moving higher, you know China isn't as well. Next up, we have, as we like to call it, Dr. Kospi, right? The Kospi, South Korea. Again, another, I keep on doing that today, I don't know why. Ugly, right? China is not going to make a deal. What is this all about right now? You ready? Soybeans. Soybeans, okay? This is this first deal. Now, here's when the trade war started, the cost of soybeans. And look at it. Each time they come and go. Just came out this morning, Bloomberg. They had 50 barrels of soybeans bought from the U.S. today. That's 1/10 of normal. You think a deal's coming? No, it is not. Stop this market. Why do they react to this silliness? Okay? Last, the consumer. Where's the consumer right now? Consumer is a big part of the market, right? And you see what's happened this week. When you're looking at earnings, low-end retailers are doing very well right now. They're looking for bargains. They're saving more money. That's good, right? No, if they're saving more, they're spending less, okay? You have auto sales. Look at that trend. Pretty obvious. The trend is not your friend. JOLTS, job openings and labor turnover, right? Going down as well. So the consumer, and now, how about this? This is a new chart I put together yesterday. Continuous claims on unemployment, right? The gray is recession, and you can see, right, where we are. Going higher, and we just broke, right, 0. And you can see, right, each time that's happened in the past, not saying it is, but I'm watching this. These are the things that continue to lurk below. Wrapping things up, fear and greed, right? Where are we? 2 weeks ago, 42. How do you get these numbers? Look below, okay? 84 this week. We were 91 last week. Yeah, everyone's greedy. FOMO, right? You got to get in. All indicators are positive. Personally, I feel we're overbought. Puts me in a cautious stance. I think there's other opportunities out there. I showed you on what's on my radar. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.